Hey friends, what if you could collect dividends from one of China's largest and most profitable companies, Ping An Insurance, without needing a China brokerage account or touching RMB? Yes, you heard me right. Thanks to the brand new Ping An SDR listed right here on SGX, Singaporeans like you and me can now earn China dividends directly in Singapore dollars. In this video, I'll show you what exactly is an SDR, the pros and cons for Singapore investors, why Ping An Insurance is actually a solid dividend stock, and how and when you'll get your Ping An SDR dividends paid in SGD. So if you're building your passive income portfolio and want simple access to China's dividend-paying blue chips, hit subscribe to Wealth for You, smash that like button, and stick around till the end, because you might just find your next dividend gem. This video is for educational and informational purposes only. It is not financial advice. Always do your own research or consult a licensed financial advisor before making any investment decisions. Investing involves risks, and past performance is not indicative of future results. Part 1. What is an SDR? Explained simply. Alright, let's start with the basics. So, what is an SDR? SDR stands for Singapore Depository Receipt. Think of it as a wrapper. An SDR lets you invest in a foreign stock like Ping An Insurance, but in Singapore dollars and on the SGX. So instead of opening a China brokerage or dealing with RMB conversions, you just buy the SDR on SGX. And behind every SDR is a real share of Ping An Insurance, sitting safely in custody for you. And the best part? You still get the real dividends, but in SGD, directly credited into your Singapore bank account. Simple, right? Part 2. Pros and cons of Ping An SDR for Singapore investors. Let's talk about the pros first. No need to open a China brokerage. No need to deal with RMB. Everything is settled in SGD. Receive China dividends directly in SGD. Singapore's regulatory protection under Monetary Authority of Singapore MAS, and easy access via your regular SGX brokers like DBS Vickers, Poems, or Tiger Brokers. But there are also cons you should know. Liquidity is still low since it's a new SDR. Not many people are trading it yet, and you still bear the same business risks as if you owned Ping An shares directly. If Ping An's profits or China's economy weakens, your dividends and share price could be affected. Part 3. Why Ping An Insurance is a strong dividend stock. Now the big question. Why Ping An? Here's why Ping An Insurance has caught the attention of dividend investors. First, it's China's second-largest insurance group with over 227 million retail customers. Second, it's one of the world's most recognized insurers by brand finance. Third, it has strong fundamentals with over RMB 11.6 billion net profit in 2023. Fourth, it maintains a healthy solvency ratio above the regulatory minimum, showing financial strength. Fifth, it has a consistent dividend payout for years, even during challenging times like COVID. Sixth, the dividend yield is around 6 to 7% at current prices in April 2025. Seventh, management has expressed commitment to maintaining stable dividends. This makes Ping An a reliable dividend stock, especially if you're looking to diversify outside Singapore without complicating your life. Part 4. How and when do you get paid dividends? Now, how do you actually get paid? It's very simple. Ping An usually pays dividends twice a year, an interim dividend and a final dividend. SDR holders on SGX will receive their dividends in SGD, automatically converted from RMB. The dividends will show up directly in your bank account just like any SGX stock. The dividend timetable is the same as the original Ping An shares, meaning you'll follow the same announcement, ex-dividend, and payment dates. No need to manually claim or convert anything. Everything is handled for you by SGX and CDP. This is one of the biggest selling points. You get exposure to China's dividend cash flows, but everything feels just like receiving dividends from a Singapore stock. Part 5. Final thoughts. And there you have it. You now fully understand what Ping An SDR is, its pros and cons, why it could be a solid dividend stock, and how the dividends flow straight into your pocket in SGD. If this video gave you clarity, helped you learn something new, or even made you curious, do me a small favor. Click that like button, subscribe to Wealth for You, and don't forget to ring the bell so you won't miss the next video. Also, I'd love to hear from you. Are you considering adding Ping An SDR to your portfolio? Or maybe you still have some questions. Drop them in the comments below and let's chat. Thanks for watching, stay invested, and I'll see you in the next one.